Good morning. Good morning, everyone, and thank you to Noble Capital Markets for this opportunity. And welcome everyone to NobleCon17, track number 4. I appreciate the opportunity to tell you a little bit about Golden Valley Mines. You can find more about us on the OTCQX with ticker symbol GLVMF, and on the TSX Venture in Canada, ticker symbol GZZ. Golden Valley is actually named after the town of Val-d'Or, which is where we're based. And that's probably worth a few words. We're pretty much in the middle of the gold mining industry in Eastern Canada and the center of the industry for mining exploration. So Val-d'Or is about 6 hours driving north of Montreal, driving because the airport's been closed since March because of COVID-19. So this little town is going through an unprecedented boom because of gold prices, gold mining, the expansion in that sector, in particular over the past few years. I like to leave this slide up a few moments longer than most of my peers do. Mostly it's a reminder to myself that the information isn't just supposed to be timely, but factual. And you shouldn't be shy about holding us accountable for any statements that we make that appear to be offside, in particular, forward-looking statements. No, that's not a picture of myself, but the broken down prospector. I like this image because it kind of conveys a few sentiments. One, not just true for the mining or natural resource industry, but true for public companies in general, is that a lot of the money actually goes to support peripheral services, listings, legal, compliance, audit. A lot of the money doesn't actually go to the primary purpose. So part of what makes Golden Valley Mines different is we try to stay dedicated to the primary focus, mining exploration, creation of value from our own assets. So Golden Valley is very focused on dilution to its share capital. So stock charts are always a useful image to try to convey a few things. One, the amount of shares that we have listed and outstanding, 13.5 million shares. We consolidated 10-for-1 last June. And part of that is because we're looking at a broader exposure in the United States in particular and looking at some of the different platforms. But who owns the shares? That's a key part of our story as well. The largest group of shareholders is the board of directors. So the board actually own 30% of the company, and it's important, I think, to state that ownership has increased for each of the last 5 years. So it'd be one thing if we had 30% ownership by the board in a new listed company that had just done its IPO. We're 20 years old, and the ownership has effectively doubled over the last 5 years. Other significant shareholders include the Quebec government institutions, including the largest pension fund in Canada called La Caisse de dépôt, based in Montreal, Quebec. So there are 4 Quebec government institutions that collectively own about 10% of the company. That's quite unique for a junior mining company to have 30% direct ownership by the 4 directors and 10% by government-backed institutions. Beyond that, Robert McEwen and a Chinese nickel mining company are other significant shareholders as well. I like to show this one about the volumes. We graduated from the OTC QB last June to their higher level at the QX, and almost immediately our volumes spiked upwards to be about 50% of the daily back in June, right through to about Christmas. January has been a little lighter to date. We're trading about 1/3 of our daily volume in the US and 2/3 on the TSX Venture. I'd like to say a few words about my board because they've been around for quite a while and they're significant investors. Joe Groya used to be the Director of Enforcement for the Ontario Securities Commission. That would be the Canadian equivalent, more or less, of the SEC. He's also our lead director. Jimmy Lee is the largest individual shareholder, owning about 23% of the company himself. He's actually a chemical engineer from Seoul, Korea, originally, living in Dubai, but via Vancouver, British Columbia, where he became a chemical engineer and is the chair of an NYSE-listed pulp and paper company called Mercer International. To my knowledge, this is one of his only mining investments. And so I think that's quite a significant attribute for a small company like our own to have Jimmy Lee as the largest investor. Bill McCartney is an accountant from Vancouver, BC. It actually started one of the largest public accounting firms in Western Canada doing accounting for public companies called Davidson and Associates. And the four of us together own 30% of the company. So that's quite unique compared to our peer group. I like this stock chart because it conveys a few ideas. One, Golden Valley's performance is shown in dark blue, and that's a 5-year chart. So we've certainly done a lot better than the two lines trailing at the bottom of the graph. The line in gold would be the price of gold in US dollars. And you know that gold's had a pretty good year, partly due to COVID and market volatility, but gold itself is up about 20% year over year in US currency, 26% in Canadian and Australian and most others. And the light blue line at the very bottom would be the index for the TSX Venture Exchange. So given that that's actually a composite for over 2,400 companies, it's a way of showing that Golden Valley has actually outperformed both the price of gold and the TSX Venture Index. So we're pretty proud of that over the past few years. Here's a few more peer group comparisons that help place Golden Valley. So Golden Valley here I'm comparing to other companies, public companies, that work in Eastern Canada, Quebec, Ontario mostly. So some of those names should be recognizable to any investors that actually have participation in the sector, showing Osisko Mining, Probe Metals, Renforth, and Cartier Resources, who are all exploring in Quebec, northeastern Quebec, northwestern Ontario, and we've definitely outperformed most of them. In fact, the only company that I'm showing here that's outperformed us, and consistently in some cases, is our own subsidiary that's also a public company called Abitibi Royalties. And I'll say more about that in a few more slides, but Abitibi owns a royalty on the largest gold mine in North America called Canadian Mellardic. And speaking of royalties, for no other reason than Golden Valley's principal anchor asset would be the shares it owns in Abitibi Royalties, I've taken the liberty of comparing us to other royalties companies. So some of those names should be very recognizable to your investors: Franco-Nevada, Sandstorm, Royal Gold, to name but a few, Osisko Gold Royalties. And you'll see that Golden Valley has outperformed most of them. And that's true over a 1-year time frame, 2 years, and 5 years. And again, that's consistent with our board's ownership and increase in participation in the company over the same 5-year period. So we've done better than the gold price, better than the venture index, and better than most of our peers. This image is really the business plan in a single slide. Golden Valley would be the large circle on the left of your screen, the left side of the slide. And the 4 smaller circles are each components that contribute separately to the Golden Valley story, beginning with Abitibi Royalties on the top. So that's definitely the anchor asset held by the company. Golden Valley currently owns just under 45% of Abitibi Royalties. And Abitibi owns the royalty, a net smelter royalty, on Canadian Mellardic Gold Mine, the east side. The next circle, called Val-d'Or. Val-d'Or is a prospect generator using a different model for exploration. Val-d'Or is the company in our stable that does all of the local work in Eastern Canada. So grassroots prospecting, staking and acquisitions, purchases, mergers, acquisitions, etc. All of those are done within Val-d'Or Mining Corp, and Golden Valley currently owns just under 40% of that company. International Prospect Ventures, using a very similar prospect generation model, is actually working exclusively in Australia, specifically Western Australia right now. And Golden Valley owns just over 13% of that company. Those 3 companies were all spun out of Golden Valley in a plan of arrangement in July 2011. And so each one has evolved over the past 9 years, developing its own strategic plan and the boards, and they're also autonomous for their own financing. The bottom circle is the part that's more conventional in our business plan. So some of those names might be recognizable to some of your investors: Bonterra Resources, O3 Mining, Sirios Resources, to name but 3. We have about 10 different joint ventures, some vested, some are on their track to being vested, but that's the part where other parties are earning an interest in Golden Valley's properties. They raise the capital. So our business plan is very unique in that we avoid dilution to our share capital. That's the principal tenet in what we try to do, is avoid dilution. And why do we want to be diluted when the major shareholders are the board of directors? We don't want the dilution. We want other people to spend their money on our properties. And that's where Golden Valley is quite different. And that's why some of the government funds have also become very large supporters of Golden Valley. I'll switch this one in Canadian dollars to, oh, sorry, back we go. This is the US dollar slide. The top right, the square, showing 75 million would be our market capitalization, more or less at the close yesterday in US dollars. And the gold square in the middle of the image, showing 109 million, would be the net asset value, the sum of the parts. So I mentioned that Golden Valley's principal asset would be the shares it owns in its own subsidiaries that are also public companies, 3 of which are shown amongst those 4 boxes on the left. So RZZ would be Abitibi Royalties, with a market cap in US dollars of just over 100 million right now. VZZ would be Val-d'Or Mining Corporation, and IZZ International Prospect Ventures, collectively contributing a value of just over $109 million net asset value. And the market cap is 75 million. So that discount or net asset value gap is actually the opportunity in Golden Valley. It's easier to state in Canadian dollars because 1 equals 1, and our market cap is almost exactly 100 million Canadian. If you could pay $1 and get $1.40 in value, that would likely represent a good opportunity to many investors. And that's what we're trying to show here, is that 75 million market cap actually gets shareholders over $109 million in value. And that's the way things are today without contributing to exploration costs or being subjected to dilution. So in terms of absolute numbers, this is what the 3 subsidiaries actually look like. Abitibi Royalties, Golden Valley owning 44.9% of it, which in absolute numbers is 5.6 million shares. And in Canadian dollars, yesterday it closed at over $24 per share. We did our listing back in 2011 at 30 cents a share. So we've certainly enjoyed spectacular growth over the past 9 years. International Prospect Ventures, the company working in Western Australia, Golden Valley owns 4.4 million shares, representing 13% of the equity. And Val-d'Or Mining Corp, the local prospect generator, we own just over 25 million shares, or nearly 40% of the total equity. It's worth mentioning also that Abitibi Royalties began paying a dividend almost exactly a year ago. So not many companies in the royalty space actually pay dividends, and we've increased the dividend twice since we started it in the 4th quarter of last year, most recently in the present quarter. These are some images of where we're based and some of the local infrastructure. So you can see here northeastern Quebec and northeastern Ontario, northwestern Quebec. And some of those images would be owned by the premier gold producers in the industry. So the circle on the far right would be Goldex Mine, one of the divisions operated by Agnico Eagle and based here in Val-d'Or. The next image to the upper left would be the large open pit at Canadian Mellardic. That's about 15 kilometers from where I'm sitting this morning. And Canadian Mellardic is actually the largest gold mine in North America. The next image would be the town of Mellardic, and always worth a few words to mention that they had to move over 200 homes to actually develop that open pit back in 2007-8. And those are some of the boy toys or Tonka trucks that operate at the mine. They're 240 tons dry each. And then the town of Kirkland Lake on the far left, which is one of the principal gold producing regions in northeastern Ontario. And the circles, the gold circles and green triangles you see scattered throughout there would be Golden Valley's properties throughout the Abitibi Greenstone Belt. So a few words on Abitibi Royalties, and I'll remind you that this is actually our anchor asset. So this is the company that owns the royalty in Canadian Mellardic gold mine. And a few things that make Abitibi quite unique amongst its peers would be a small share count. There's less than 12.5 million shares, and not many companies that begin with a small share count actually have a share buyback also underway. We've been buying back shares for 3 years. This is our 4th year with the normal course issuer bid. So we're actually reducing our share count. We don't have any stock options or warrants. We're entirely aligned with our shareholders. And who would the largest shareholders of Abitibi be? Well, it begins with Golden Valley Mines. That's our anchor asset. So Golden Valley owns just under 45% of the company directly. And if you then include my personal shares and the other directors' shares, that number creeps up to just over 50%. That's deliberate. No hostile takeover coming. If anybody wants to do a transaction to acquire the royalty in the largest gold mine in North America, they must go through the front door, which is Golden Valley Mines. So our trading range has reflected that progressive growth over the past 9 years. We've moved up from 30 cents at listing to 24.50, I think, at the close yesterday in Canadian dollars. We're now listed on NASDAQ International in the United States. And Golden Valley is very focused on monetizing its ownership in that company. Should also mention that Rob McEwen, a pretty well-known name in the industry, is a significant shareholder of both Golden Valley, where he owns about 4%, and Abitibi Royalties, where he owns over 11%. And other significant shareholders in Abitibi would again include the Quebec government institutions. So they're very well invested in both Golden Valley, the parent company, and Abitibi Royalties, the subsidiary. So in terms of our market capitalization and the increase of same, and our volumes, which have started to creep up since we graduated on the OTCQX, this chart and the 2 columns on the left of the chart show you the increase in our market cap from $3 million basically at the origin to over $300 million, at least in Canadian dollars, most recently. So we're pretty proud of that because it hasn't been a straight path and particularly easy times for public companies. And again, we've done much better than our peer group and much better than the TSX Venture Index. So here are a few images that would show you in practical terms what Abitibi Royalties actually owns. So this is a map of the area around Mellardic, Quebec, about 9 miles from here, 15 kilometers. And the 2 principal properties that Abitibi Royalties owns, or owns the royalty in, would be these 2. And it's probably worth mentioning that these properties were staked by Golden Valley Mines using the Mining Act back in 2003, and rather quickly vended to what was then called Osisko Mining, or Osisko Resources, who discovered, developed the deposit, put it into production, and ultimately sold it to Agnico Eagle and Yamana. So Yamana Gold and Agnico Eagle are both cross-listed in the New York Stock Exchange and in the Toronto Stock Exchange, both principal operators in the multi-billions in terms of market cap, and we own a royalty in the east side of that deposit. That's important because we don't contribute to the capital needs of the project. So you can see the red zones that span across the project, the top part of the image. Those would be the zones that are currently in production. The large light gray area would actually be the contour of the open pit, or at least the open pit the way it looked in October last year. And you can see that there's not one zone, but multiple zones trending more or less east-west across the project. The yellow line across the top is actually the highway. And that's also part of the attributes of the project. You can drive to it. Because it's in Quebec, we have discounted electricity. Many of you probably know that places in the eastern seaboard, like New York and Boston, actually get most of their electricity from Quebec. And Quebec uses its economic or hydroelectric utilities as a way to stimulate the economy and create those high-paying jobs, which of course, being Canada, we tax highly. So these royalties, 3% on this property and 2% on this one, actually cover multiple gold-bearing zones that are still being developed, some of which are currently in production and contributing to our cash flows. Some of the zones include the Odyssey North, Odyssey South, Gouldy, Charlie, Barnett Extension, Sheehan, and there are probably others that can't think of right this second. And a few other words about other assets in the area. The original properties would be these two. The Mellardic CHL property, that would be the outline of the open pit. And all of these other colors I'm showing on the map are other royalties and net profits interests that Abitibi Royalties has acquired in the past 3 years. So we've stuck with our core business, which is royalties, gold mining royalties, royalties in safe havens, the safest of which would definitely be the province of Quebec, certainly a province that ranks highly every year in the Fraser Institute study of the best areas in the world in which to conduct mining exploration, development, production. And the province of Quebec stimulates its economy by focusing largely on the mining industry in the far north. And again, principal objective is to create more of those high-paying jobs. So Abitibi has been very fortunate in sticking with its business plan, including developing more royalties and more exposure for its shareholders. In terms of local images, the upper left would be the open pit at Canadian Mellardic Gold Mine. And if you look at the back of that image, the top left, this part, that would actually be inside the Abitibi Royalties royalty property. The mill on the top right is the largest gold mill ever built in Canada. And by reference, the average gold mine would be in the range of 5,000 to 6,000 tons per day. This mine is a real behemoth. It produces over 55,000 tons per day, and it's actually being expanded, and hence the need for discounted electricity. Very important attributes. And showing you some of the local infrastructure, the province of Quebec actually had to move the highway to accommodate the open pit. You can see the highway skirting the edge of the open pit. It just opened about a year ago, allowing for the open pit to be expanded. That's very important for us because it's being expanded on the east side, which is the coverage afforded by Abitibi Royalties royalty. And again, some of the other infrastructure in the local area. This one is a small open pit separate from the monster pit above. This one is called the Jeffrey Zone. It actually is in the middle of the Abitibi Royalties royalty property, and it was mined for about 18 months, up to a couple of months ago. So in terms of other assets and other irons in the fire, this is International Prospect Ventures, another one of the companies that we spun out in July 2011. International Prospect is working in Australia exclusively, and you'll see some similarities in our recipe, one of which is a fairly low share count, 33 million shares, Golden Valley being the largest individual shareholder, and the board of directors and friends and family and the Quebec government institutions also being very significant shareholders. And what does International Prospect Ventures have, and what is it doing? I came across a story a few years ago about a geologist from Vancouver who I thought was onto something rather interesting, in that he had reconstructed plate tectonics. And take it as a given, most of you know well enough that the continent of Africa snugly fits into South America and so on. The same is true for Western Australia, which snugly fits into what is now South Africa. Why is that important for gold mining? Well, South Africa has been the largest source of gold production for over 100 years, the largest in the history of the world, having produced over 1.6 billion ounces. And when I read that this geologist had come up with the idea that Western Australia wasn't just analogous, that he had found the spot and nuggets and geology that appeared to be analogous, similar, virtually identical, geochronology also similar, I thought that was a very interesting story. And so International Prospect Ventures positioned itself by acquiring these properties shown in red. There are actually 8, and the map probably does a disservice because it's a gigantic area I'm showing, but that's 250,000 acres. And we own 100%. We staked it. There's no royalties payable to anyone. There's no third parties. We're not earning an interest. These are 100% owned by International Prospect Ventures. And so a good story became a better story about a year ago. And many of your investors have probably seen those shows with the crazy people in the outbacks with metal detectors running around, cracking ground and pulling out nuggets. Well, that's this part of Western Australia, namely the Pilbara. And that nugget I'm showing in the image is actually over 7.5 ounces. And I'm showing a 20-cent Australian coin by reference. There are over 200 nuggets that have subsequently been recovered from our properties. And we're not looking for those nuggets on surface. We're looking for the source of those nuggets. That's what the play is here. And again, the largest investors would be Golden Valley Mines and our boards of directors and some of those Quebec government supporters. Val-d'Or Mining Corporation is our local prospect generator, working in this area around Val-d'Or, Quebec, northeastern Quebec, northwestern Ontario. Similar share structure, the largest shareholder would be Golden Valley Mines with just under 40%, nearly 25 million shares, and the board of directors being the next largest shareholders, and those Quebec government institutions, again, who've provided outstanding support right from our origin. And so Val-d'Or Mining Corporation is actually where we test these ideas, trying to find another Abitibi, trying to find another Canadian Mellardic. This is where we do that. And so that's the image of the Abitibi Greenstone Belt, the gold-bearing, and actually base metals-bearing area as well in northeastern Quebec, northwestern Ontario. Some of the towns that you might be familiar with, if you're a mining investor, would be Timmins and Kirkland Lake in Ontario, Rouyn-Noranda, Cadillac, Mellardic, Val-d'Or, Quebec. And all of these gold dots and green triangles would represent the base metals properties and the precious metals properties that are owned by Val-d'Or Mining Corp and that we're working on at this time. We have nearly 60 properties in this company that are 100% owned by Val-d'Or Mining Corp. And again, we're focused on dilution and avoidance of dilution. So always looking for joint venture partners to try to minimize that dilution to our own share capital. So these are some of the images of recent activity from the Baden prospect in Saskatchewan, Ontario, one of the many gold properties that we have within that company. If you recall the image where I showed you our business plan in a single slide with 4 circles, this would be the bottom circle, the part that I suggested was recognizable or conventional to most investors. These are arm's length public companies that are listed on the stock exchange that are earning an interest in properties that are golden valleys. Some of them are now vested, meaning the other party has acquired 100% ownership, but subject to royalties that we've created and payment of various consideration, sometimes equity, sometimes cash. In this property, Bonterra Resources is the operator now. They earned an 85% interest, leaving Golden Valley Mines with a 15% interest directly and a 3% net smelter royalty or return. They also had to pay us $200,000 in equity over time while they were earning in, and they did. They've now vested at 100%. Whoops. This is another joint venture that's active and actually very close to where I'm seated here in Val-d'Or. This would be behind the Goldex mine operated by Agnico Eagle and Yamana. Our partner on this one is O3 Mining, and O3 is part of the Osisko group. Originally, the transaction was done with Alexandria Minerals, who were themselves taken over by O3 about a year ago. O3 have come up with some spectacular results on this property, joint ventured from Golden Valley. And on this one, they can earn an 80% interest, leaving Golden Valley with a 20% free carried interest. That's important. And a 1.5% NSR. So both an NSR and a free carried interest. And the agreement requires that they make $250,000 in cash or equity payments over the term. And we're in about the middle of that. They have about $1.5 million left to spend to become vested, and they're well on their way. This is one of the most active properties in our exploration stable right now. And this is an example of a vested transaction, one which was majority Golden Valley, which we divested of, sold or transacted to the other company called Sirios Resources. Sirios have spent over $20 million on this property, leaving Golden Valley with an NSR that ranges, depending on the gold price, between 2.5% to 4% NSR. At 1840 US gold price, that would be a 3% NSR. They've also paid us nearly $1 million in cash and equity over the term of the agreement, and they've drilled over 64,000 meters. And they've now reported, at least in inferred resources, just under 2 million ounces. So that's brand new. 3 years ago, 0 ounces, now 1.9 million inferred ounces. That could be important in that it's only 10 kilometers from the Eleanor mine operated by Newmont. So showing you again that endorsement comes in various forms, but on this property, the operator acquired it from Golden Valley, has spent over 20 million on it, has discovered just under 2 million ounces, and that's one of our various properties. So in a few words to wind things up, our transactions are deliberately unique. We're not trying to be like the peer group. We're trying to be unlike the peer group. We have strong share performance, and I'd like to think at least part of that reflects the fact that we've avoided dilution. The principal shareholders are the board of directors and Quebec government institutions. No debt, no hidden anything off balance sheet. And the business model is really focused on avoiding dilution. So joint ventures to use other people's money. We used our own subsidiaries and listed them so that they could accomplish work and avoid dilution to Golden Valley's share capital itself. So this is the last slide showing you in a few words what we actually try to do. We're prospectors. We break rocks. The ideas all come from early stage investment, grassroots exploration. We do very small programs ourselves. We're trying to avoid the dilution to share capital. We find partners, well-capitalized partners. We try to find partners that have the capacity to ramp up exploration if the results merit, such as we've seen at Canadian Mellardic with Agnico Eagle and Yamana, such as we've seen with Sirios Resources, Bonterra Resources, and O3 Mining. Ultimately, Golden Valley is creating NSRs and free carried interests in its own grassroots properties. We staked them as prospectors. We developed them. Our partners develop them more. We retain royalties. We're not just focused on gold. We look at all commodities, any commodities. Over time, we've explored for diamonds, uranium, nickel, copper, platinum group elements, copper, zinc, VMS deposits, and gold principally in this market. And so I think at this point, I'm looking for Mark or for any of the other people that might have questions, and very happy to entertain any questions or respond to comments, but always happy to take questions. Thank you.
Thank you, Glenn. I'm Mark Reichman, the senior analyst who covers the metals and mining sector for Noble Capital Markets. I want to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question is, where has your stock traded over time relative to net asset value, and where should it trade?
That's a loaded question. I guess I could talk about that for quite a while. Over time, I think our cyclical low was 0.04 cents during the global financial crisis. And I think our all-time high was a few months ago, $8.32 Canadian, whatever the US equivalent would be, just over $6. And in terms of our net asset value and where we trade with respect to that, typically Golden Valley trades at about a 30 to 35% discount to its net asset value, as represented by those shares that I described, mostly the shares in Abitibi Royalties and the other subsidiaries. So that 30% discount is probably the direct answer to the question. It moves around, doesn't take a lot of volume with small share count companies to affect the price. So it's ranged between 25 and 40% over the past 12 months. But I think that's a fair answer.
Next question is, Abitibi Royalties commenced a dividend in September of 2019. What is your dividend policy?
I think the yield is just over 1.2%. Right now it's 18 cents per share per year, paid monthly. And I'm not aware of any other mining company or royalties company that pays its dividends monthly. But that's important to Golden Valley in particular, because Golden Valley owns just under 45% of the equity and therefore receives the largest portion of that dividend. In Canadian dollars, that's just over $700,000 per year, which is again why I'm very quick to state no dilution coming and no need to raise funds for compliance, listings, legal, audit. The dividend and the revenue from dividend offsets, more than offsets, all of our costs and our entire burn rate.
The next question is Quebec, you mentioned that Quebec has invested in the company. Typically, what is their holding period?
That's a really good question. I don't think anybody's ever asked me that before. To my knowledge, there's no time limit. So it's not as if they're short-term investors. I am aware that they trade from time to time. They've been very good and loyal shareholders in Abitibi royalties. They've held the Caisse de dépôt, the pension fund. To my knowledge, they have never sold a share, and that they've been very solid supporters for more than 4 years. Some of the other funds are more transactional. They buy and sell over time. But the collective holdings, as I understand it, are around 10%, and that hasn't changed much over the past few years. They're very good and loyal shareholders. They have different mandates. So Sidex is one fund. They have a mandate backed by a committee. They're really focused on commodities and parts of the industry that might be out of the spotlight. So they're very quick to encourage green carbon investment, clean energy exploration. So commodities such as lithium, to name but one, nickel being another one. Some of the other funds are a little more liberal, and they buy and sell based on whatever commodities are in favor. Right now, that would be gold. So there is no specific timeline. We don't have to wake up in the morning and fret because it's the 5th year or 6th year. They don't work that way.
Next question is, how closely do you work with your JV partners, and in aggregate, how much is spent on exploration?
That's a very good question, and you've allowed me some latitude, I suppose, with how I answer it. If I was to include the royalties company, last year Abitibi Royalties had not far from 150 drill holes drilled on it by Agnico Eagle and Yamana. Multi-millions of dollars in direct expenditures just on the Abitibi royalty property. But in terms of the direct joint ventures, last year Bonterra vested, so they completed their $2 million requirement, but then they kept spending. Sirius Resources vested 3 years ago. They had to spend $5 million to complete earning their interest. They've spent over $20 million, and they recently updated their resource estimate on the Chichu project in James Bay. So last year's expenditures would have been in the range of $2.5 to $3 million. I think that's a fair estimate. And O3 Mining are still in the process of vesting. They haven't vested yet, but they're in about the middle of the agreement. They had to spend $4 million over 4 years to earn 80%, and they're in about the middle of that. If they hope to vest in the next 12 months, that would be in the range of $2 million. So those would be pretty robust expenditures if that was the only thing we were doing, but we're actually working in tandem with our own subsidiaries at the same time.
Well, Glenn, that is all the time we have. Thank you for joining us.
Thanks very much, and stay healthy, everybody.